Hi all, welcome to Elliott Wave News Channel by Wave Strategy Advisors. This is Ashish Kyal here, and today video series becomes very important because there has been a serious event which has taken place in the global markets and resulted into sharp sell-off in equity markets. Now, majority has been focusing only on the equities, but if you look at the bond market, the currency market, impact on the safe havens like gold and silver, and then impact on the equities. Let me now come down to the Brexit event which has taken place. If you check until yesterday, there was a very high possibility looking at the global markets that Britain would vote to stay back in the European Union. However, in the today's session, we can see in the morning after the vote came out, it was a shocker not only for the equity markets but a big shocker for the bond markets as well. And the currency markets really responded very sharply to the sharp by depreciating sharply. So there was a very big depreciation we saw in GBP, which was nearly around 7 to 8% against US dollar. And the similar impact was also seen in Indian markets when GBP against INR sharply depreciated. So this clearly shows a very strong impact, creating a very uncertain market in the recent times. Now, we have been warning about the impending downtrend, which looked very probable over past few days or weeks, and we clearly mentioned in the research report that the uptrend does not look like a new bull trend, given the fact that the entire structure has been in the overlapping fashion. Also, the movement over the past few days have been clearly suggesting that the high of 8265 was protected only momentarily. That was taken out in the yesterday session, keeping that the uptrend was in a very mature stage. This video series is going to talk about what is the Elliott wave structure of Nifty, and by looking at the charts, you can very clearly see that from the lows created at 6825, which was on 29th February, the entire up move has formed a double corrective pattern. The first move was a first standard correction in the form of a zigzag pattern, and then we started seeing a diametric formation, which is a 7 lagged correction. A diametric pattern is a neo wave pattern, which is an advanced concept of Elliott wave, and within this 7 lag pattern, prices completed wave G in yesterday's high, which was close to 8300, and today the entire gap down opening retraced back the up move in the faster time. This has provided a first stage negative confirmation that the entire pattern, which started from 6825 to the high of around 8300, is now complete, and any rallies should be utilized as a shorting opportunity. For a trader, today's movement could have been very tricky because Nifty had a gap down of nearly 250 points, and initiating short positions at those levels does not warrant because there is no strong risk reward ratio. However, given the signals can go short, and the stop loss that has to be maintained is going to be the level around 8265. If you are not able to digest such a huge risk level, then probably one shouldn't be trading in the current scenario. Also, there is a lot of uncertainty which will now loom around at least for over a week, because what will be the policies that UK is going to negotiate with that of the Eurozone is going to be very important. Secondly, I think overall it's going to be beneficial for UK as a whole, because eventually they do not want to bear the burden of the countries or people that are lethargic and do not want to contribute towards the growth. And this will eventually help UK on a standalone basis, but definitely over short term, this raises the odds of other countries also thinking about leaving the European Union. Secondly, a huge impact on the currency market is definitely going to impact both the importers and exporters, given the fact that even if there is an appreciation in GBP against INR, in INR against GBP, still the importers might have already hedged their positions, so they might not be benefited. And at the same time, the exporters will not be able to benefit because of the sharp appreciation in INR against GBP. So this volatility in the currency is a dangerous phenomenon, and this is definitely going to impact the bottom line of a lot of IT companies and also companies having exposure to the eurozone. At the same time, Indian markets, the overall breadth was not improving over past few days. If you look at trend indicator, it reached to the level of 0.5, which we have not seen over the past 2 years. At the same time, the number of new 52-week highs have drastically reduced over the past few days. So, given the Brexit event or not, eventually the technical structure was exhibiting a weakness, and now the breakdown has happened, which looks to be an ongoing C wave on the downside. And this C wave should eventually the zone of 7,700, which is the point from where the F leg, from where the E leg of the diametric pattern started. So, in a nutshell, to wind up, the overall trend for Nifty now is sell on release. Any strategies should be revolving around that. Move back below today's low is going to be the another confirmation that the downtrend has resumed. The stop loss level that one has to maintain is going to be around 8265, 8290 levels. And at the same time, one should avoid creating any fresh long positions unless and until we see a very strong momentum above 8,300. That's all from me from here, and you can always get in touch with us for any queries, any doubts. You can visit the website wavesstrategy.com, or you can also write to us at helpdesk@wavestrategy.com, or contact us at 99204 22202 for any queries. I would also like to point out that we are conducting a training on Neo Wave and time cycles, which is going to be held on 23rd and 24th of July. And I would appreciate if you can join me there, where we will be discussing all the techniques with respect to Elliott wave, advanced Elliott wave, which is Neo wave, time cycles, and the various indicators that we have used in order to gauge the trend and warn our users just before the capitulation that this looks quite likely. At the same time, 6825 was the level where we were taking exactly the opposite stand and mentioned to go long, and this is the level where we are taking again the opposite stand to the crowd, and we think that this is probably the beginning of a very serious sell-off and not the end. That's it from here. Thank you very much.